Hi everyone, welcome to BISP Trainings. My name is Faiza Alam, and today I am going to tell you about the taxation overview in our NetSuite application. I mean, how the tax management actually works in our NetSuite application. We'll know about the uh, taxation management module of NetSuite. But before that, we will be starting it with a general introduction of taxation. What is a taxation and what are its type, what are its features. So we will start with its introduction. So tax is a mandatory fee that is imposed on individuals and companies by the government in order to build the economy of the country. It can be on the state, local, or federal or national level. So it's a compulsory payment that is to be paid by the citizens who are liable to pay it. So taxes are the primary source of revenue for most government. This money is spent to improve and maintain public infrastructure, and that includes roads, and then fund public services such as schools, hospitals, emergency services, and other welfare programs. The tax that is collected from the individuals is used for the betterment of the economy and all who are living in it. A tax is payable regularly and periodically as determined by the taxing authority as per the compliances. Since, as we all know, that tax is a legal correction, hence refusal to pay the taxes is a punishable offense. So this is about the introduction. There are certain objectives of taxation, why the taxes are imposed. So the primary aim of tax is to raise revenue to meet public expenditures. Most of the governmental activities must be financed by taxation, and it has been the instrument of social and economic policy for the government. It has certain objectives, the first of which is price stability. So taxes are regarded as an effective means of controlling inflation, and by raising the rate of direct taxes, private spending can be controlled to a great extent. The other objective of taxation is economic development, as I have mentioned it earlier, that the taxes are collected for the betterment of the economy. So the economic development of any country is largely conditioned by the growth of capital formation, and this can be done with the help of taxes, under which the government controls or expands the economical activities by providing various concessions, rebates, and other facilities so that the economic growth can be very well achieved. The next objective of it is increased revenue. So government requires carrying out various development and welfare activities for which huge amount of funds is required. So the government collects funds by imposing taxes, and in this way the revenue can be increased or enhanced. The last objective of taxation is reduced unemployment. So the problem of unemployment can be reduced to a great extent as government initiates a promotion of various employment generating activities. So the problem of unemployment can be reduced or can be solved up to some extent by imposing a taxation. So these are the objectives of it. And if we talk about the types of taxes, so taxes have been divided into two categories: direct taxes and indirect taxes. So if we talk about the direct taxes, so as its name looks like, so direct taxes are the taxes that are levied directly on the taxpayer who pays it, and if he cannot pass this tax to someone or any other, it means that the person on which it is imposed, he has to pay the tax directly to the government. And the indirect tax, if we talk about the indirect tax, so these are the taxes that are levied on good that are imposed on goods and services, and here the taxpayer can easily shift the burden of taxes from other person. Like we can say that a mediator is there uh, who plays the role, if we take any retailer, so he will collect tax from his customer, and then he pays it to the government. So he acts as a mediator, So under indirect tax, there the tax is paid indirectly, and the burden of tax can easily be shifted to the other person. And the thing that is to note here, direct taxes are imposed on incomes and profits, while indirect taxes are imposed on goods and services. Further, direct taxes have been categorized into various types, like direct tax has income tax and indirect tax. So, income tax, as we all know, that the tax that is levied on a person's income is called the income tax. We can take an example here, like there are certain rules that are there, like if a person who is below the age of 60 and whose income is 2.5 lakh, so he'll be entitled to pay the taxes as per the prescribed rates. So this is about the income tax. So if we talk about the corporate tax, so corporate tax is levied on the business income. Like if the business is gaining any profit, so the business has to pay tax on that profit, that will be covered under the corporate tax. So here we are clear with the direct taxes. It is levied on incomes and profits, and here the taxpayer has to pay the taxes directly to the government. Indirect taxes is been divided into sales tax, value added tax, that is VAT, service tax. Other taxes are also there, like custom duty, import duty, and all. So if we talk about the sales tax here, so it is the paid by the retailer, who further shifts the tax burden to the customer by charging sales tax on goods and services, and then pay it to the government. So here, at least three parties are required. We have seen the example, like a retailer is there who charge the tax from its customer and then pays it to the government. So this is a kind of an indirect tax. If we talk about the value added tax, so it is collected on the value of goods and services that is added at each stage of production and distribution, and then finally passed on to the customer. Again, it is a form of indirect tax, like the whatever expenses or the cost that is incurred during the process of production and distribution, all are included in the cost of goods, and then tax is imposed from the customer, and then it is paid to the government. The last category of it is service tax. So it is imposed on the gross or aggregate amount that is charged by the service provider to the recipient. So this is about the types of introduction. Basically, there are two types of taxes, direct and indirect. And again, these two categories has their subdivision. So our today's concern is NetSuite taxation. What is NetSuite taxation? So NetSuite tax management solution, or a suite tax, is a configurable tax engine that delivers end-to-end global tax management, wherein the finance team can generate detailed reports, analyze transaction tax details in real time. Along with that, it also simplifies the global tax compliance, saving time, reducing cost, and eliminating the manual calculations, as it provides flexibility to support specific country needs and states up to date with changes in relation to tax calculation and reporting. NetSuite tax management system handles local taxes across subsidiaries from GST to VAT to withholding and US sales, and use these taxes. It acts as an integration tool that integrates the tax relating functionality within the suite that companies use for billing, revenue recognition, payment processing, and so on. So this is about the NetSuite taxation. And NetSuite taxation has been divided into two parts, that is the legacy tax and the suite tax, of which we will be taking the legacy tax. Further, for the if we talk about the taxation, so NetSuite has certain editions that has been defined. So the first edition of it is NetSuite US edition. Then we have the NetSuite Australia edition, that is AU. Further, we have the Canadian edition. Then we have the Japanese edition, that is JP. Then we have UK edition. United Kingdom, and at last we have the international edition for taxation, that is XX. And this edition is not any, we can see that it is for international, it is not for the country specific. So each edition that we are seeing has its different tax types. They have their different tax reporting periods, and there is also a difference between the foreign trade settings of it. Like if we take US, so if we have here, and for the US, sales tax type is followed. If we talk about Australia, so there is followed the GST, that is tax on goods and services. For Canada, they follow the GST and PST, that is provincial sales tax and tax on goods and services. For Japan, there is also a consumption tax that is followed. And if we talk about UK and international, so here the VAT, that is value added tax system, is followed. So these are the various editions that are available for us for tax management, of which we'll be mainly focus on the US taxation or US edition. And the basic, if we talk about the tax accounting in the NetSuite, so it starts with the setting up of certain features and setting certain preferences. Then we'll be knowing about the permissions that are there for handling the various types of tax. Then we will be looking at the tax code, tax control account, tax schedules, and what are nexuses. We will be knowing about that. How can we manage the tax period for the purpose of handling the taxes. And then at last we'll be looking at the tax reporting of it. So this is about the basic introduction of our NetSuite taxation module. In our upcoming sessions, we'll be knowing about some more features and its functionalities. So that's all about the topic. In case of any doubts and consultations, you can reach out to us at www.bispsolutions.com. Thank you.